Hello everyone and welcome to Day Trader S&P 500. Today is November 22nd, 2020. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top-ranked stock market timers. And you can see our recent 3-year short-term trading or day trading account there. Even though I've been trading for 30 years or more than 30 years, I'm relatively new to YouTube, so we appreciate if you guys hit that subscribe button and the reminder bell, and don't forget to pound that like button. I really appreciate you guys helping out our channel here. We've got a couple little quick announcements here. We have a new website that's going to enter the coding stage real soon, so we're excited about launching that. And in addition, I mentioned our trading record there. We're back to trading futures, and all of our futures are auto-traded with Striker Securities. So futures trade 23 hours a day. If you don't want to sit in front of your computer, and as you can see, I average 700 trades, more than 700 a year. You can auto trade Woodson Wave Report signals through Striker. I think it was last year, Thursday night. I entered a trade pretty late, a little before midnight, and sold or bought. We were short S&P futures at a nice little profit on Friday near the close. So anyway, we've got a lot of stuff on the table today. We're going to look at the S&P. We're going to look at gold and Tesla as we usually do on our weekly Sunday night. Do a little quick review. We look at here. We're looking at a daily chart of the S&P. And you can see we're looking for 5 waves up from the March lows. Okay, we'll get our little Fibonacci extensions here, and you can see there was our wave 1 high, there was our wave 2 low. I'll leave it there for a second. You can see our wave 3 high, that was a September 2nd high, and then we had a nice little wave 4 retracement there, a nice little flat. We can measure that to see what it actually retraced Fibonacci wise. You can see it went right on the 382. Okay, so we can label that for you guys here. This is intermediate degree, and we'll see if it's set on intermediate. Yeah, it is. Very nice. Okay, and there's 4. 5 is going to be up here somewhere. I'll lay it there for now so we can get rid of this, and this may be a review for you guys, but we can let's take this extension off, and let's look at our 5th wave target here, and it should put us just below the magical 4,000 part, and we got the wrong thing. My apologies, guys. Let's do the Fibonacci extensions again. Okay, here's our wave 1 high, there's our wave 4 low, and our wave 5 target is, it's just under 4,000. I might not have that exactly on there. I think that's a little high there. Get it down. Yeah, we've got it at 39.96. So we're looking for 5 waves up from this 4th wave low, which bottomed on October 30th. As you know, that was right within our Fibonacci time spiral. I don't know if we still have that up here. This one that called every turning point, alternating high and low. It's pointing to 11:30. It'd be interesting to see how that works out, November 30th, because I was happy with it calling all these alternating highs and lows basically for 2 months, the whole months of September and October. You can see our low, high, low, high, low, which took us to 55 days. We'll see what happens for November 30th if it marks the high. It's got a chance to. Well, I'm curious to see how that plays out if it gets up to here by November 30th. And by the way, I think we're looking at just 4 more trading days to do so, and this decline is still going on. But let's look again here at the market from the wave 4 October 30th low. Here we're looking at a 4-hour chart. You can see that 4th wave flat correction there, ABC, and we've got 5 waves up here, and we're correcting that. Okay, I think we get a little closer look at that. Let's get into, yeah, here's that October 30th low, and let me get our wave count up there. Here it is. I'm gonna do the bigger one here. There's 1, there's 2, there's 1, 2, 3, 4, 5. That's 3, that's 4, and that's 5. And that degree is too large, so we're going to knock that down. Let's just knock it down to minor. Okay, you can see the fractal, the subdivisions within the third wave. We'll get another perfect 5 waves here. 1, 2 down, 3 up, 4 down, 5 up. Make that 1 degree less. That is minute degree, so you can see the fractal of a 5 wave within a larger 5 wave pattern. And there is our 5th wave, okay? And that's at the November 9th high. Okay, so if this is 5 waves up, we need to correct it. Let me see what I'm looking at over here. Now we'll save that for later, okay? Let's get into our Fibonacci retracement here, and that's 5 waves up. Okay, so we're looking for a move here to 34.88, 34.39, or 33.90. I don't like to usually use the 786, so we're going to get rid of that. If we can get into settings here, give me a second. We'll leave it up for now. Never mind. Okay, so from here, we've got an A wave down, a B wave up, and what appears to be a C wave down. Okay, so we can look. Let's look at this on that next chart, because I think I've got that already drawn out here for you guys. Okay, there's the A wave down. There's the B wave up. Okay, we've got some interesting Fibonacci relationships here. You can count a 1, 2, and a 3, and a 4 stays above the 1, and then a 5, and 5 would gain a 1.618 right here. We have a couple multiples here. Okay, this is that 786. That's why I left it up there. Retracement of the B wave. There's the B wave up. Okay, let me put these 5 waves up for you guys. Okay, for this C wave down. Okay, here we have 1, here we have a 2, and a 3. 4 could be here, or it could be going farther. We don't know yet, but 5 gains equality with 1, which would be a near double bottom or just a slightly lower low, which is all it is required for a minimum 5 to be lower than 3, but more than likely is here, and it could go down to here where wave C equals wave 1. We're just going to leave it here right now, but you can see where 5 equals 1 is right here, and that's right on the 786. And then if it goes to the 1618, then it's going to be at a double bottom at the lower degree C and larger degree A wave here. So we're looking at A down, B up, and C down. This would complete that retracement near the, that's right about the 3,500 level. Right here is just at the 3,500. That'd be a nice round number. So we're going to have to really watch this decline, because this 4, fours are long and sideways. It could stretch out and go up and down, form a triangle. It can do a lot of things. So we're in a stage here where this could go anywhere between 3,587 down to 3,500. But if it's a 4, it can't go above the wave 1 low, which is 35.88. And you can see it hit here 35.84, and over here it hit 35.85. But it can't. If it does go above there, then we're taking this high out and we're taking this high out. Okay, so we'll watch this. That's a big, huge difference. Now, if you factor this in, let's say it takes out that wave 1 low, so it's got a chance of going up not just above 36.30, but also above the high here of 36.45. That's the November 9th high. But I still think this correction's not over. This thing here has to, C wave should ideally go down, not just do a 786. It can, but it would be nice mathematically and Fibonacci wise if it went down to right at the 3,500. So that's what we're looking for there. Let me get back into here. Okay, we can draw it up on here too. Let's see if we can get our Fibonacci extensions going. Okay, there's our A wave low, there's our B wave high up there, and you can see there's those areas where we have a lot of multiples hitting in the right in the same spots. These are off by a couple, so I don't draw draw those lines exactly perfect how they should be. But this one shows it better. Okay, so that's what we're looking at here. We're looking at 1, 2, 3, 4, 5, and this 5 waves up and then down. So we're looking at let's get that just so you guys can see what we're looking at here. Okay, for this 5th wave. All right, we've got a 1, and we'll get a 2, then a 3, then a 4, and then a 5. And that's a lower degree there. So it'll be there. So that's what we're looking at here. That's where we are, okay? And I can't imagine that is going to play out by November 30th. The time is not as important as the price and the Elliott waves. Let's move on to gold, if we will. Really, there's no change in gold. This long sideways 4th wave is just that, long and sideways. You can see it's playing up. That's what I was mentioning with the S&P. 4th waves are long and sideways by nature, and this is a prime example. I mean, this 4th wave started in the beginning of August, and here we are toward the middle to end of November, and we're still in a 4. I still think wave 5 is going to go up above 2100. I've got a target here at 2166. You can see everything counts from the March lows. March of 2000, we can see 1 up, 2 down, 3 up, and here's 4, and it's an A, B, C, D, E. This thing will probably crunch down and just get tighter and tighter with lower highs and lower lows, and it'll spring up and thrust up out of this long, looks like a descending triangle to me here. We'll draw that on there. Let's get the trend line here. Okay, there we go, and whoops, make it on there. You can see our bottom here on the trend line is flat, and it's a descending triangle pattern right there. Okay, let's put it into that. We may get a throw under, but again, 4 cannot go below the wave 1 high. So our make or break on this count is that 1765, currently at 1872, and there's our 4. Look for this to either do a throw under or explode out of this long sideways pattern to our ultimate wave 5 target. That's gold. Nothing really changed there. Tesla. Here we go. We're looking at that 5 wave pattern going all the way back to the October 2019 low. And you know, we extended this 3rd wave as this broke out of the triangular 4th wave pattern. We used to have the wave 3 up here, the wave 5 here. We're looking for a correction. Last week we adjusted that. The key with Elliott Wave is knowing where you are wrong, and we knew it right there. Okay, as soon as that broke above there, we're like, no, that is a triangle. That is a 4th wave. There is the E wave low. We should see 5 more waves up from this October 30th low. No surprise, all of these indexes are moving on the same turn dates. Okay, so we're looking at what happened from the wave 4 October 30th low to get a wave 5 up to new highs. And actually, again, the minimum requirement of wave 5 is to be above the wave 3 high. And you can see our high here on, I think that was Friday or Thursday. It was the 19th, yeah, is 508. And our high here was 502. So it has satisfied the minimum requirement. What we're going to look for is 5 waves here. And we'll drill down. This is a daily chart. Let's go to an hourly chart. Here you see that triangle, and here you see the first wave up, and then a decline in wave 2. And we can count 1 up, 2 down, 3 up, 4 down, 5 up. So that is most likely 3. We'll see a 4 and then a 5, and it's possible that this is all of 5, but not likely. The wave pattern suggests that this is only 3. If it is, there's where 3 equals 1.618. There's where 3 equals 1. But let's look at this 5 wave pattern, and let's see here. This is from that November 9th low, and there's our retracement levels. Okay, and that is 1, 2, 1, 2, 3, 4, 5. It could be 3, 4, 5. It could go up to that 514 and still be a 3. Okay, our retracement levels from this high are 4, 565, 451, and 438. I wouldn't rule out a move right up here to 514 to B3. Let's put our numbers on there for you guys. Let's get our impulse waves. There's a 1, there's a 2, 1, 2, 3, 4, 5. There's a 3. There's where we're looking at for the 4, and then a 5. Okay, again, 4 can't go above, or in this case below, the wave 1 high. So that would be right on the 50% retracement level. Okay, so Tesla bears some watching here. It's getting ready to put in a major top. Let's look at this. Yeah, here we have it with the after hours, pre-market, post-market, that same pattern. Okay, from the October 30th, we've got a 1 up. We've got a 2 down. You can see a 1, 2, 3, 4, 5 for 3. That counts as 5, so it didn't reach a perfect 1618. We can get a 4 here. Again, we can do that retracement level. Let's just let's put that retracement level on here for this whole third wave. Okay, and let's just say there's the 1 high. Let's say 4 comes down here and reaches a 382. So let's get a potential 5th wave high out of this here. Okay, so we've got 1 up, and we grabbed the wrong one again. My mistake, guys. Let's try that again. Let's get the Fibonacci extensions out. Here we go. Okay, from the low, there is 1. There's 2 down. There's 3 up. Let's say that 3 holds there, and it comes down and hits the 382 right here. So we are looking at a 518 for a high of 5. Okay, and the next one after that is 539. So we'll move 5. Let's put it here for now. All right, this could still go up and catch this multiple and a little extended third wave, or down for 4. So this has some leeway both ways, up and down. But what we're looking at is, you can see this is wave 5 of 5 of 5. Okay, so could be a big blow off top, but this move is 99% done. Okay, because we're looking at the 5th of a 5th of a 5th wave. That's all we need. Wouldn't be surprised if it blew off and went way up, but we have our price targets there. Okay, guys, that's it for this week. Thank you again for patronizing our channel. Remember to hit that like button, and until next time, take care, everyone.